Hey guys, welcome back. For those that don't know me, my name is Kunal Samani. I'm Chief Market Strategist at Level Traders. In this series of videos, I'm going to be changing topics slightly and focusing on the fundamentals of trading. Now those that know me or follow my channel will know that I'm predominantly a technical trader and use technical analysis. However, from time to time, I do find uses for fundamentals, and I want to show to you why fundamentals can be useful in trading. So I'll be going through that in this video and also giving you a high overview of the aspects of fundamentals and what's to come in this series. Remember to hit that subscribe button if you like what you see. Thanks again for watching. Check this out. Let's now have a look at why fundamental analysis can be useful for trading. So the first point, it helps identify themes and structural trends. By looking at macroeconomic factors, we should begin to see themes and trends coming out of that, potentially leading to trade ideas. For example, at the moment, vaccination programs are beginning to gain traction across various countries, and you're seeing these countries beginning to ease restrictions and looking to open their economies again. One of the hot topics is holidays. People want to go on holidays, and you've seen anytime there's kind of any positive news around that, the airline stocks start to take off. The next one is fundamental analysis enables you to spot market distortions or anomalies that can lead to outsized returns. So what I mean by that is markets can be irrational, which can present opportunities. One of the great examples I have here, who remembers this headline? When Volkswagen became the most valuable company in the world? For a short period of time, due to hedge funds covering short positions, Volkswagen became the largest company in the world. Might sound familiar to people, right? With a recent example. Then we have simple financial ratio analysis, which can be effective. So this is probably the one that when the word fundamental analysis comes out, this is probably the one that people think about, looking at accounts and financial ratios and numbers. Now, financial ratios can be great because they can simplify the numbers that companies present in their financial statements. It can be quite daunting looking at a company's financial statements. So many numbers, which ones should I be looking at? Which one should I care about? Don't worry folks, I'll be going through this in more detail in this video series where I'll dedicate a video on financial ratios. Then we move on to generally all information is available publicly to calculate fair value of stocks. So this one I feel is an important point because of social media. Information that privileged hedge funds and institutional clients would have had access to is now becoming more accessible to everyone. You can generally find out anything you want or everything you want from a company online, and there are companies that can provide you some of this information all in one place. For example, one of the stockbrokers that I use has a partnership with a research company called Morningstar, and that allows me to download pages of facts and stats on any given particular company. A lot of reports are even leaked online, particularly news about companies. Do you guys remember this headline? When Intel was about to report its earnings and the stock moved sharply higher just before the close. So Intel normally reports quarterly earnings after the bell, after the US session, but the stock moved, and this was the headline that came out because someone had leaked the earnings. So it just shows that because of social media, information is more accessible now. The final point I want to stress is the time horizon, medium to long term. So this really is aimed at swing traders and investors. What fundamental analysis requires is time to work. Because as the second point highlights here, the market distortions that occur, they need time to unwind, to correct itself. Generally, stocks over the long term tend to revert back to their fundamentals. So here is what is known as the top-down approach, and it's something I use for trade ideas. When you look for trade ideas or companies to invest in, rather than starting at the company level, it's better to look at the macro level. What countries are doing well? what countries are not doing well. So for example, right now, you would look at economies where the vaccination programs are moving at a pace and economies are likely to start reopening. Then you would then drill down to the next level and look at sectors that may thrive off this news, or industries that might do well as economies reopen. And then from that you can work out which companies within those sectors and industries are likely to outperform. And from there you'll be able to generate trade ideas, both long and short trade ideas. So if we have a look at examples of each one, so starting with the global economy, economic data is a big factor of that. So you would start looking at things like GDP, inflation, unemployment, consumer confidence, retail sales. One of the biggest reports that come out on a monthly basis is the US non-farm payrolls. So here's an example of the March headline number, and look what it did to the market when this got released. So you can see it's quite an important factor, the non-farm payrolls that come out each month, and it's something traders anticipate and await eagerly every month. Then we have the monetary policy. So the central banks, the Fed chair, who is now known as Jay Powell by the meme community. He's a big factor in what happens to asset prices, where the dollar ends up. You've also got the ECB, who control the euro and inflation in the Eurozone. You've got the Bank of England and the Bank of Japan. They, I would say, are the key kind of four central banks to watch out for. They do dictate money supply, liquidity, and what ends up going into the markets. So another macro factor, fiscal policy. So everyone knows this guy, Joe Biden, the President of the United States. He's been splashing the cash, which is what's helped kind of build sentiment and optimism in the US at the moment. And people have been flocking to the stock market and investing their money. We also have structural impacts such as services versus manufacturing, export versus import. So exporting countries will want a weaker currency in order to increase exporting and increasing their GDP. So Germany, for example, is a big exporter of cars. So a weaker euro helps car stocks because car sales will then increase and it makes cars cheaper overseas. That's the kind of dynamic to look for as well when looking at economies. You want to look at the mix of whether it's export, import, services versus manufacturing. And that theme then can dictate which sectors and industries and companies you look at. Then if we look at the next level down, within sectors and industries, one of the things to look at is market structure. So who's the market leader, the number of competitors, barriers to entry. So everyone will know this guy, Elon Musk. Elon has a big share of the electric vehicle market because Tesla was the first one there. So they dominate sales in the US for electric vehicles. Then if you have a look at the opportunities and threats within the sector, so one of the examples is government intervention or litigation and regulation. So I've got this headline here where EU said Apple's App Store broke competition rules after a company had filed a complaint against them, and that can have an impact on the share price. So that's another thing to look out for. Then if we go down to the company level, one of the things to look out for is, well, the business model and the competitive advantage. So we looked at the electric vehicle market and Tesla we spoke about, but what about Apple and the smartphone market? You know, Apple dominates that area, so that's another factor to look at. So who is a market leader and who has the competitive advantage in that market? Another thing to look at is the competency of the management team. So this headline came out quite recently where the Amazon chief, Jeff Bezos, said he was going to step down, and it did have a slight impact on the share price, as you'll see. The management team is also a big factor in what can happen to the share price. I spoke about this before. This is the next one, which is financial analysis, so looking at the balance sheet strength, P&L and cash flows. Then we have linked to this is company earnings and future outlook. you can get companies where they report a loss but the share price goes up, and you're thinking, why is the share price going up? The company made a loss. But the way the market works is the market has an expectation, and if that expectation is beaten, then the share price tends to go up. If it misses that expectation, the share price tends to fall. But you can also get a company which beats the estimates of an analyst, but the share price still falls, and that's down to the forward-looking outlook. Markets are forward-looking, so if a company gives a weaker forecast than expected, that will get immediately priced into the stock. And then the final point I want to make is on corporate actions. So this is looking at dividend payments, stock splits, reverse stock splits, share issues, and we'll go through some of these examples covering that topic and what it does to the share price. So that was an overview of fundamental analysis, and we'll be going through each one of these individual topics in more detail in future video sessions. I hope you found this useful. Remember to hit that subscribe button so you don't miss any future content. Thanks again for watching. Take care, folks.